And we are recording. My name is Garrison Gilbert. We are multifamilymasters.com. This is Multifamily Masters Live. We do this once a month, third Wednesday of the month, every month.
Monday.
Third Monday of the month, every month. Tons of free content, tons of value add. We do this simply because we want to increase our network, number one. Number two, we want everyone to understand this business. We want everyone to know this business. We want everyone to be able to do this business from the ground up, because plain and simple, we want you closing deals because we want to partner with you. We're all about surrounding ourselves with good people. We're all about surrounding ourselves with the right people. On top of that, we have a conference coming up beginning of October, 1st and 2nd. Vegas, Multifamily Masters.com conference. It's called multifamilycon.com. Get your early bird special VIP ticket. Get it now, get it early. And let's get this party started. Tonight we have Mr. Bernadeau Charles. We missed Elsa Nguyen. This is going to be hosted by myself, Mr. Powell Chee, Mr. Ferris Musa, my two business partners. I'll introduce myself real quick. My name is Garrison Gilbert. Been buying real estate full-time, 21 years. I've never had a W-2 job. I've bought a lot of properties. I've made a lot of mistakes in my day. I learned this business the old-fashioned way by doing it. My two business partners, Mr. Powell Chee, Mr. Ferris Musa, they're a lot smarter than myself. They have a lot more going on than myself. Go ahead and take away, Mr. Powell.
Appreciate that, Garrison. So just a real quick background on me. So I live in Los Angeles. My name is Powell Chee. I live in Los Angeles. Invest out of state. So really, I have never invested inside of California. All of my investments have been out of state, whether they're multifamily or self-storage. Really kind of grew my legs with multifamily, buying my first apartment building in Indianapolis. A year later, I bought another one in Indianapolis. If anybody's interested, I'm going to sell one of them. So if you let me know if you're interested. Let's see.
And Powell, if I want to buy your apartment buildings in Indianapolis, how do I get a hold of you?
I mean, let's see. The best way, truthfully, is social media. So if you are on Facebook, join our Facebook group or get on Facebook. Reach out to me that way. It's probably the easiest way. I mean, I just get bombarded with too many emails. So reach out on Facebook, friend me, and then send a message that you're interested, and then we can go from there. But happy to talk to you. It's a 40-unit apartment complex in Indianapolis. Besides that, bought a couple more, was a general partner on 5 different syndications, all large apartment buildings. Several of them have sold. Several of them are in the process of being sold. And then when the pandemic hit, I added a different asset class to my repertoire, and I added self-storage to my repertoire. And since then, 2021, I bought my first one in January of 2021, added 5 more self-storage properties in 2021. So I have a total of 6 that year. 2022, I closed on 2 more this year. And I'm working on number 3 for this year. So that's what I'm doing right now. And super excited to hear from Bernadeau as well as Elsa about this property. And why don't I turn it over to Ferris? Ferris, you're here, aren't you?
All right. Thank you, Powell. Hello, everybody. I'm Ferris. I do not have a 40-unit in Indianapolis like Powell. For those that know me, I'm based in Houston, Texas. I have a company called Disrupt Equity. We're a vertically integrated company. We have our own management company, a few other businesses as well. We have about 3,000 units or so, mostly in the Texas and Georgia markets. We did actually close our first Florida deal last week, and so continuing to grow. And I think, again, like we tell people, this business is all about relationships and networking and just getting educated. And so being part of a community, being part of a mastermind is a big part of that. And I've done a deal with Powell, and I've done stuff with Garrison. So it's kind of about growing, learning, and kind of meeting other people. And so with that said,
we've done 2.
We've done 2. That's right, 2. And so, stuff works, people. So, I tell people, get uncomfortable, get out there, go meet some people, and learn to grow. And so with that said, excited to hear from Bernadeau and Elsa, and I will hand it back to Garrison to help introduce them.
So go ahead, Bernadeau. Feel free to introduce yourself. And Bernadeau and Elsa, put your contact information in the chat below. name, cell phone, email address, text message, social media links, whatever you got, whatever you want for people to reach out to you. These are individuals that are actually doing deals, actually closing deals. These are the type of people that you want to surround yourself with. These are the type of people that you want to partner with. These are the type of people that you just want to brainstorm with and be friends with. Let's start with, well, normally I would say Bernadeau, but Elsa, ladies first. I have to say ladies first. Elsa, introduce yourself.
Hey, thank you, Gerson. Hi, everyone. Thank you for being here tonight. My name is Elsa Nguyen, and I am from San Francisco Bay Area. I have been in the syndication business since 2019, and I did not start it out in multifamily. I started out in land development. Shortly after that, we bought that piece of land to do a hotel syndication. And shortly after the pandemic, I learned that hotel is probably not the right asset class to focus on. So I switched gear over to apartments. And that's when I started to partner up with Multifamily Masters, work with Garrison. We have closed, this is the fourth or fifth deal that we closed together. I can't remember. And come to know a lot of great people, met a lot of great people through this program. That's about it for me.
Bernadeau, take it away, my man.
All right, so I'm Bernardo, based out of Orlando, Florida. I started investing in real estate back in 2019. Really, I started back in 2017, started a meetup to kind of learn, went deep, books, podcasts, meetups, conferences, and then so I took my first jump in 2019, bought a single family home, and from there, bought a duplex. Then I realized I wanted to go bigger and get cash flow much faster to leave my W-2. So I began to branch out into syndication as of last year. And as you guys know, I closed my first deal recently. And so, yeah, that's why I'm here, looking to grow.
Awesome. And Bernadeau, you know what? He is the epitome of what you need to do if you actually want to do this business. You don't just talk about it, you actually go do it. I met Bernadeau, he's in our mastermind. How long ago did you join the mastermind?
Yeah, so I actually went and attended the Multifamily Masters conference last year. And so when I went there, I was like, this is amazing. I've been to a few other conferences, but this one was just the way it was framed and the way it went, it was just so amazing. It was a whole different vibe. It was I learned a lot from it. And so I wanted to join that day that I went there. And so I joined right after.
Okay, so you've been in the mastermind for 7 months or so now, 6, 7 months, 5, 6 months.
Yeah, a few months. I joined back in November-ish, early December. Yeah.
And while we're talking about the Multifamily Masters Conference, I got to give a special shout out to Mr. Chris Collins. What's up, homie? He was the MC at that event. I'm hoping I can get him to Vegas to do some cool stuff with us.
Yeah, man.
I'm gonna put him on the spot and make him say yes right here in front of everybody.
Hey, he's funny. Chris is really funny. So
Well, ask Chris's agent. The fee is a very nominal fee. Please reach out to me and we'll coordinate payment.
Yeah, Ferris takes, it's like 8.786%. It's some weird number, but the good thing is,
I give 8.76% to Chris and the rest goes to me as the agent.
The rest goes to charity. He's a great person, everybody.
And it can all be paid in crypto. But Bernadeau, did you think that within 5, 6 months you would actually close a 66-unit apartment complex? I mean, that's a pretty big deal. That's a $4.5 million property.
Honestly, to be honest, I did not. I thought it was going to take me a year, maybe a year and a half to get there. And so I was hungry. So I kept just networking, underwriting deals, calling brokers on my lunch break, in the morning, at night. So I was just going at it constantly until it happened. But yeah, I thought it was going to be at least a year minimum to get something going. So I was definitely surprised by it.
Good for you, man. I appreciate, that's awesome.
Yeah, I would say, Bernadeau, even a year, truthfully, is pretty fast for a good sized property like that. It takes a while to learn the business as well as network enough to be able to find the people that can help you take down that type of deal, right? It's not just like, hey, I'm going to go buy a $150,000 house or duplex or something like that. It can be a significant step up from doing that. So that's great that you were able to do that fast.
And we have Elsa on here because he partnered up with his coach in the mastermind. So those two have one-on-one coaching calls and whatnot. They create a little bit of a friendship. Boom, let's do some business. Awesome. So Bernadeau, Elsa, whichever one, tell us about the property. How big is it? How expensive is it? What class is it? Tell me anything and everything you know about it. Like, give us some details. Give us some of the juicy.
Yeah, so this one is 66 units in Columbia, South Carolina, built in the 1970s. And so we saw this property, rent averages were about 775 and the market was about 950. And so we jumped on it. It had a lot of a deferred maintenance on it, really bad property manager and absent landlord or owner. So there was definitely opportunity there just for better improvement of the property management aspect of it. And again, the market was just had demand for the rents pushing higher. So we just jumped on it.
And how long ago did you guys close this deal?
We just closed this deal, I want to say last month, right? So very recently. It was definitely a long time in the works as far as the negotiations, the underwriting, just pretty much everything you put in the books and the podcast. Now I was doing it, and I didn't have time to really take my time. Really, it was more so just hit the ground running to get it going. So.
No, good for you. So you went to a conference, you joined a mastermind, and you're on podcasts. Is that right?
Yeah, I've done a few podcasts. Just talking about my experience in real estate. Again, I'm so hungry that I started a meetup before I had no experience at all, in my market. So I went at it, man. And so I've been on a few podcasts before I even had a deal. And now I'm doing a few more after this, about this deal. And so like I said, I'm hungry. So I'm ready to work.
Good, man. Where's your meetup at? What city, what state?
Yeah, so I have a meetup in Orlando. It's in Orlando, Florida. We meet once a month. This one is, it's everything from single family, multifamily, land deals, flipping. And so if you're interested, please, if you're in the area, just let me know. I also just started a Multifamily Masters Orlando chapter here in Orlando, and that's also taken off.
You have 2 meetups. I didn't know that.
Actually, I have 3, but
okay, good.
So that's also going pretty good. It's taking off too. And so yeah, man, thank you.
Good. Elsa, do you have any meetups, or what's your story? What do you got going on?
I go to a lot of meetups, Garrison, but one of my coaching student and I are actually starting a new meetup now in the Bay Area. And our first one is going to be the second Thursday of July. So we came together, we put our brand together, and we came up with this great meetup idea. So I can't wait till she's also a real estate. She has a real estate background. I have a real estate background. We have a lot of people that we know in the real estate business. As you know, it's probably a lot easier for us to reach out to those folks. And
when you say the real estate business, you talking realtors, attorneys, real estate lawyers?
Realtors. So a lot of this are real estate agents that we know, because before doing this syndication full time, I was working as a real estate agent. So we do have quite a big network of people that we know in the real estate business. And this meetup group is for everybody, but I would say primarily is that we're going to take it to other friends and people that we know in that space.
Good. Congratulations. Awesome. So with that being said, Bernadeau, let's get into Elsa. Let's get into the nitty gritty. Let's talk about the headaches. Let's talk about issues that you had to overcome. Let's talk about any mistakes that were made. Let's talk about any wins. Let's talk about any successes.
I also like to find out how they found the deal, right? I mean, like that's an important piece of like, how'd you guys find the deal, right? And like, what are the steps you went through to find it and actually get it under contract? Because that's one of the hardest parts for people who are starting out.
Yeah, so this deal was found by one of my partners, and so it was honestly just via talking to brokers, right? So this is a broker that we built the connection over time, had lunch with, and so she had the deal and sent it over to us, and we just underwrote it. So we're just talking to brokers, and it came our way.
How much time and effort and energy have you put in the last 6 months, year, whatever that time frame is, to network with brokers?
A lot of energy. Anytime that I have is either talking to a broker or another investor, and so I have W-2, so I have to kind of use time and be and adapt, right? And so If it's a lunch break, I'm on the phone. If it's in the morning, I'm on the phone. At nighttime, on my way home from from work, I'm talking to an investor or some other individual that may potentially I can add value to, or vice versa.
Good. What's your W-2 job, if you don't mind me asking?
Yeah, so I am an engineer by trade. So I'm working in the engineering field since 2014, and I'm looking to slowly kind of leave the field and kind of do this full time. So.
Oh, good for you, man. Full-time job, a couple meetups. You joined them. Like, good for you for taking action.
Yeah, I don't sleep much. So, and I have a daughter.
Are you married? You got a couple kids running around? What's that?
Married.
Look like?
Yeah, I have all that. Honestly, when you're sleeping, I'm not, right? So
Wait, you have kids? You seriously have kids?
I have a daughter. Yeah, she's
I would have never. How old are you, man?
I am 31.
Okay. I thought you're, never mind. Okay, good.
Thank you, man. Appreciate it. Yeah.
Good for you, man. I'm not trying to get super personal here, but man, you threw a couple.
Let's do it. Let's get
Like,
personal. Let's get personal, Garrison. I'm ready.
Good, man. Good. Elsa, give us
So
some of the.
I just want to add that this deal, even though it was introduced to us by a broker, but I learned that it's also on the MLS. So keep in mind, folks, a lot of time we go to big brokers, LoopNet, Craigslist, or even CoStar to find deals. This one was actually on Redfin. So if you're going to look for a deal, don't overlook those places. Sometime you can find good deals on Redfin just on the MLS. So this was actually on the MLS.
And I'll throw a little tidbit out there. A lot of people also overlook LoopNet. A lot of those deals have been picked through and looked at, but if you really dig into those those mom and pop properties, a lot of times you can steal a half decent deal. I've come across a few of them in my day. Go ahead, Powell. I apologize.
I know. I was just going to kind of echo what you guys were both saying. It's like, a lot of times they're in places where you would just think that they're not, right? You would just skip over. So whether it's Redfin or LoopNet or things like that, my very first property that I bought, the one that I'm actually talking about selling, the one that I bought, it was on some random website that I literally, 10 minutes after I found it, I didn't even know how I got there. I couldn't have gone back. It was like, I went to one website and then I clicked to like a bio, and then a bio, I clicked to like, see portfolios, and then it clicked to another one. I don't know how I got there, but I got to some random site that I was like, I've never seen this property on any of the other sites that I've been to. Never seen this property, didn't think it was real. Called up the broker immediately, and she said, yeah, we're selling this property. It's been on market for about 2 weeks. If you're interested, let me know. And eventually I just jumped on it as soon as I could, because I was like, I didn't think that I saw any other deal that even compared to what I was looking at. So, I mean, I don't know how to get back to that website, but it was like just some random small website. It probably had like 6 listings on there. So it was like tiny little website that the broker probably didn't know how to list it on a bigger site, or didn't want to pay for the money for it to be on a bigger site, or I don't know why, but it wasn't on any of the bigger sites. So,
and to be honest, before the deal, I would have never, because I was told, LoopNet is where deals go to die. I mean, we all have heard that before. And so I would have never looked at LoopNet for deals. But now, I mean, if you look carefully and know what to look for, I guess, it can happen. So I learned that lesson.
Let me ask Chris Collins. Let me ask Chris Collins a quick question while I got him on here. How do you find all of your deals, man? You got a lot
I also wanted to weigh in. I know people, I mean, you guys are talking about LoopNet. I feel like a lot of these things are knowing your market more than others. I mean, if you look on LoopNet and you've never been to Tucson, Arizona, and it's like, oh, these numbers don't make sense, but you know that those streets around there, hey, these are all renting for 1,100 and this one's renting for 750. There's a huge delta. Well, if you're newer and you just go, I don't know, it looks like a terrible property and it's renting for 750, these numbers don't make sense. But if you know the market better than everyone else seeing it, then you can see those opportunities. So I was just going to weigh in on that really quick. But yeah, I mean, to me, deals right now are all about brokers. I personally am not putting in the time to cold call all sellers and get to know everyone, because I have the relationship with the brokers and they do that all day. So I'll just lean on them to do that work, to be honest. I mean, right now it's tough to find deals right now. So that's literally all they do all day. So I'd rather be in with the brokers, and then they can send you stuff off market before everyone else sees it, is kind of the best way that I think right now.
I got a question that I think a lot of people's mind. What was harder than you guys expected during the deal, Elsa and Bernadeau?
What was harder for me? I would say finding the terms to make the deal work, right? So because this was a fractured condo, calling lenders was kind of tough to kind of get some good terms. They wanted, different LTVs, much slower, and so um, that aspect of it took a while to kind of get rolling for good terms.
Elsa, you're involved in quite a few deals. What's your biggest aha or biggest takeaway from this deal? Your biggest headache, your biggest wow, I can't believe that happened.
I think the the biggest challenge for me as a GP on this deal was that because I was brought into the deal after due diligence. So I did not have a chance to walk every unit, which I always do before I sign off on any contingency. I would walk every unit. I would take millions of photos, and I would have all kind of inspectors to come out and inspect the property. Just because I was brought into the deal after the inspection period, I did not have the opportunity to do that. So it was very uncomfortable. I did go out to the property to walk the property, but I couldn't get to the inside. So did the best that I could, walk the property, walk the neighborhood, spend a lot of time there. And I just had to trust what the team members say the property was, because they walked the property. So that was probably my biggest challenge, is that not able to do a very diligent job on the due diligence period, during the due diligence period.
And Elsa, I see that it's dark in the background. You live in California, the property's in South Carolina, and you're actually in South Carolina tonight, right?
Yeah, so we closed the property, and now we can, of course, we own the property right now, and we can go and look at the property if we want to. So our team is actually out here, a few of us here today, tomorrow actually, and we're gonna walk. There's a few vacant units which we're gonna walk, and we have contractors with us. And at the same time, we're gonna try to get in, at least 10 to 15 occupied units. So then we have a feel of what it's really like and how much it's gonna cost for us to fix turn those units around. So yes, it is dark because I'm actually sitting in my car right now.
And you're heading to Statesboro, Georgia to check on another property that you got after this one. I only say that because I saw Daryl Brooks just hop on, who's our partner on that property. What's up, Mr. Daryl? So go ahead, pal. I'm sorry.
No, I mean, I'm just interested in hearing, just kind of more stories. Like you guys have talked about the, what was the biggest challenges, right? And so those are, I think, like whether it's big aha moments or big challenges, I think those are really important. In terms of, just so everybody knows too, if you have any questions, continue to post them, and then we'll ask those questions at the end. We'll just kind of go on and ask those questions. But
and if you're watching this on social media, register for these calls. We do this once a month. It's our Multifamily Masters Live. There's a huge benefit for you to get on this Zoom. In about 15 minutes or so, 10 minutes or so, we'll open this up to Q&A. Number one, how often do you get the opportunity to ask someone questions who just closed on a $4 or $5 million property? Number two, we're going to have a breakout session. That's what this business is all about. Not just Multifamily Masters. We're formed on our networking aspect. That's our meetup aspect of it. But you want to hop on these Zoom calls. You want to network with these individuals. You want to post videos and screenshots of this call tonight. You want to let everyone know what you do, what you're doing in regards to education, closing deals, et cetera, et cetera, et cetera, because you don't want to wait till the last minute to raise capital. Speaking of which, raising capital, Bernadeau, how difficult, how easy, how hard, how mind-numbing, how whatever your thought process is, man. What did you think of your first experience raising big capital, and how much did you guys raise as a team?
Yeah, so raising capital, it's hard. I mean, I know you guys have heard the term "find a deal and the money will come." That is not the case per se. I think you also have to learn how to present the deal to investors, and so it's definitely not something that is easy as people make it seem to be. But I definitely learned how to approach the deal, talk to investors, and so forth. I myself, raised some amount from family and friends, but I'm looking to kind of grow more and talk to other investors and so forth.
Elsa, raising capital, how difficult was it? How easy was it? What was your thought process there?
It definitely not. You know what? I have to echo what Bernadeau say. It's not an easy thing to do. However, teamwork makes everything possible. So we do have a few rockstar capital raisers in our team, and I'm very thankful that with their help, we were able to pull together our pitch deck. I would say within a couple of days, 2 or 3 days, because I was actually brought in the deal about 7 days before it was supposed to close. And having to raise almost $3 million in such a short period of time, I couldn't do it on my own. So I had to engage a few people to help me with that. And thankfully, the numbers were very strong, even though this is a fractional condo. I like South Carolina market a lot. We look at the comps, we look at CoStar report, and we know there is at least $150 rent bump that we can do on this property easily. So with that being said, the numbers are super strong, and that make it a little bit easier for us to go to our friends and family. We did a 506B, so we could only engage with people that we know. So we took it out to them, and they trusted us, so we were able to raise all the money that we needed and close the deal on time. Actually, the seller wanted to back out last minute. I guess they came to realize that it's probably worth more than what they were selling for, so they became extremely difficult on the day of closing and changing the terms on us. And we ended up having to go out and raise an additional $600,000 to close the deal. We pushed it back for 1 more week, but we managed to get through the finish line.
And initially we only had one raiser on board. So, one thing I learned is, for a deal this size, you can't just have one raiser on your team, right? You need multiple raisers that with experience to be able to raise so much equity, for a deal this size.
It's a team sport, my man.
Right. Yep. Learned that
I
lesson.
would, I would like to, certainly hear more about, the pointers that you could point out, mentioning of like how to raise capital, like, what ways that you could tell the audience like that would help them be able to raise capital better, or what things that you learned. But I'd also like to echo that not only like do you have one person raising capital, that can be a sort of a dangerous situation that you could get yourself a sticky situation. It's also the same for your investor. So if your investors, if you only have one big investor, so say you're raising, I don't know what you guys said, $3 million or something, you're raising $3 million and you have one investor who's going to come in for like 2.5 or I don't know, 2 million, even if it's $1 million, you're counting on that one person for 33%, of your whole raise. That person could pull out at any time and have any sort of emergency or any time to feel like, I don't really want to do this deal. No, I actually got a better deal. Sorry, somebody else offered me more and I'm going to be part of the GP or something, whatever. I want to put my $1 million somewhere else. And you could be out and hurting really badly. So you don't really want to put yourself in that position where you have one big investor as well. So whether there's one big raiser, one big capital, one big investor. But I'd love to hear from you, Bernadeau or Elsa, any tips for anybody that is, in this process of raising capital or talking to their friends and family, how to talk to friends and family, not just posting on social media, things like that. What are the things that you would do to sort of harbor these relationships and be able to raise capital in the future?
So I think what I learned in this process, was that you don't sell the deal per se. You just talk about the opportunity and you present it. And, if people are interested, great. If not, you just kind of move on. But you don't really try to like sell them and kind of, be so aggressive to that, it turns them off. So I've learned to kind of just be calm. Here's the opportunity. It will be great to have you on board. If not, we understand. We have more coming down the pipeline. We'll stay in touch. So.
Okay.
Yeah, I think the most important thing about being a capital raiser is that we got to build up our reputation. We got to build up our brand so people know that we are not the type of sponsor who throw out all kind of promises and not able to keep those. So establishing those relationships even before you, and I'm talking about a 506B right now, because we can only go to people that you know. So, just making sure that the numbers are strong, have a database of people that you know and keep on engaged with them. And this is why I go to Meetup, and I have my own Meetup group, because I want to be able to establish relationship with these folks. But to me, the most, because I came from an accounting background where I worked close to 20 years just crunching numbers. And so number is just, I just know number like the back of my hand, and I got to know the in and outs of everything. So when I look at deal, I underwrite them very, very carefully. So with that, I'm very confident when I go and I talk to my investors, because I don't just take other people's word for it. I do my own research. I underwrite the deal. I look at every aspect of the deal. So whenever I talk to people, I know exactly what I'm delivering to them. And I recommend that if you are going to work with people, raising capital, you got to master your underwriting. Don't just take the sponsor or the other people's work for it. You need to know the in and out of it. You need to do your research on rent comps. You really need to do your research on the capex expense. And this is why, like, I didn't get to do the due diligence, and that was difficult for me because my capex expense was an estimate that I wish I could have had a more of an accurate numbers. I think we're pretty close to it. I would probably budget a little bit more now that I know the deal ends a little bit more. But again, this is some of the aspect of the deal that we want to know prior to going and talk to our investors.
Mm-hmm. Yeah, definitely makes sense.
Let's field a couple questions from the audience, Powell.
Okay, sure. Let me rewind here.
Actually, I do want to add one quick thing. I apologize. I was double muted. I've raised a ton of money, and raising money is not, you don't raise money whenever you have a deal, right? You raise money before you have a deal. And what that really means is it's about building your reputation, right? Getting people excited, and essentially all of the prep work that you do beforehand. So whenever you have a deal, it's like what Bernadeau says, right? You're really explaining the opportunity, maybe answering some questions. You're not selling the deal. If you're selling the deal whenever you got the deal under contract, you're doing it the hard way, and you probably did it way too late, right? For those of you that want to raise money, it's about all of the legwork and prep work that you do beforehand. Like a disrupt equity, I'm very meticulous with what we communicate and how we communicate it, right? There's a lot of thought that just needs to go into how do you prep your investors, how do you seed your investors, how do you set yourself up for success. And so, for those on the call, definitely give that some thought, because really it's about the homework they did beforehand. But like Bernadeau said, if with the right deal, the money will show, right? And as we kind of learned, it's a little harder than expected. And the money will show in the sense that, hey, there's people that'll get excited, potential partners to help you get it across the finish line, right? That's what that really means. But for those of you that are looking to directly raise money yourself, it's really about the prep work that you do beforehand.
Good points first.
Speaking of the prep work, when you go to conferences, take those business cards, utilize that contact information. When you're on Zooms like this, if you look in the chat below, there are 5, 10, 15, I don't know, there's a few email addresses, contact information. Utilize that. Utilize your CRM. Utilize all the resources around you in today's environment. When you see someone closing deals on social media, on Facebook, on wherever, become friends with that person. Hang out with other individuals who are doing something that you want to be doing. Don't go to conferences, grab all these business cards and come home and do nothing with them. It's extremely easy to take a hot lead and turn it into a cold lead. It's very time consuming and very difficult to take a warm lead and turn it into a hot lead, but that's what this business needs, and it takes consistency.
Yeah.
What the fuck? Is this a charity event? Kick rocks, both.
Let's go ahead and delete that guy.
Okay.
I removed him. We should be good.
I feel like that was adding a lot of value personally, but okay.
Sorry, Chris, that was for you personally, my man. But first First question from the audience. This is definitely Bernadeau. I have my take on the answer to this, but Bernadeau, you're a successful engineer. You have a good job. You make good money. You got a family. Why go from the passive side of investing to the active side, man? Why give yourself a job? Why?
Great question. I went down the traditional route of, going to school, going to college, getting my degree. I got a job. I thought I had made it. But what I realized, man, I'm just not happy being in a cubicle, just working away. And so I wanted to be able to change that and have my time back. That's honestly what I wanted. And so I realized I could do it passively, but I enjoy real estate. I enjoy talking to people. I enjoy numbers. And so I want to be in this business actively. And I have time just goes by and I don't mind it in real estate. Where at my job, I'm looking up, what time is it? Is it time to go home yet? So it's just a different environment for me. And so I want to be able to get my time back for my daughter, my wife, myself, my family. And I'm able to do that via real estate investing and I enjoy it. So it's a plus. So that's my why.
Awesome.
Perfect. My answer to that question is who wants a full-time W-2 job? I don't care what you do. I don't care how much money you make. If you got to wake up to an alarm clock, Bernadeau, when was the last time you set an alarm clock to wake up?
This morning.
Okay. The last time I set an alarm clock to wake up, I don't even remember. Then there's nothing wrong with that, but the goal is to live life on your terms, right, my man?
Yep.
So with that being said, Powell, hit me with the next question.
Okay, this is a question just talking about kind of the team makeup. So just wondering, did all your team members raise capital, or did you just have a couple people on the raising capital side?
So we had a few people raise capital. Initially, we thought it was going to just be one person, like one man raiser. We learned pretty fast that was not a good way to go. And so there were a few people on board to raise capital, and going forward, now we know we can't just have one main person to rely on because you never know what could happen downstream.
Mm-hmm.
Number one, it's a team effort. Number two, raise more capital than what you need. If you have soft commitments for 1 million and you need 1 million, you better go raise a couple $100,000 extra because a couple people are going to back out. Chris Collins, have you ever had someone back out? They tell you, hey man, I got money for you. I want to invest with you. I got 100,000. I'm going to send you the money, and you don't get it. Have you ever had that happen?
Every time. Every time. There's never a time that doesn't happen. I mean, for me, I kind of keep like an ongoing list. I mean, I have on my board here of kind of like your hard people who are like, hey man, I got 100K on your next deal. Just let me know. Is it ready? It was your next deal. Is your next. So those people, you're like, they're not going to back out. And then you have the people who are kind of, they hit you up and it's, hey man, I'm definitely interested in this. I'm looking, and you kind of get out of them. They're looking to deploy like 50 to 100 grand, but they're not really like hitting you up. They're like this soft, so I try to keep a list, and I kind of have a running tally of like how much roughly I could raise today. And then, there's always a stretch like beyond that, you could kind of reach out and try to get more, but there always, I mean, there's never a time when someone doesn't back out, for me at least. I mean, maybe that's just, that's just life and raising capital.
If that doesn't happen, I think you're probably not pushing yourself. Your network's not growing.
Yeah. I'm going to throw my question out because I'm on the mic. So I was curious, it's been a tough time right now to raise capital. Financial landscape is tumultuous at best. Like it's shifting everywhere. People's stock portfolios and tank, So what were some of the concerns that investors hit you with? Were they deal specific? Were they like, hey, financially in the whole financial world, like what were the challenges that you came across, and how did you overcome those? Or was every investor just like, sure, here's my check, everything's great?
Most of the investors that we work with on this deal did not concern too much about the deal itself. Though after we closed, I had a couple people that came to me and asked about the condition of the property, the rent bumps. We know that the market kind of slowed out a little bit. So what we had projected for the rent increase, we could not achieve that. So our property currently at 750. And when we took over the neighbor property, which I'm going to walk tomorrow, was rented out for $1,200. So we listed our 1130, and 2 weeks after that, the PM came to us and said, you know what, they dropped the price to 900. So I'm like, okay. And so that was some of the things that we need to make the adjustment. I think we still have enough room in there, but I had a few concern about that, asking us like, how, as far as the stabilization, do you think you still can hit the projected returns? But other than that, I didn't have a lot of hiccups.
Mhm. Awesome.
Freaking A, good for you. Awesome.
Are you having hiccups right now, Chris? Is that why you ask, or what are you seeing in the landscape of today's environment?
I mean, I've been on probably 5 calls this week from various people who are like, is it rough for you right now? Like, we're trying to raise, we're like short on this raise. Like, it's just tough. This is, I mean, the last like 2 weeks. So maybe you guys closed at a great time, like, a month before things got really bad, but it's generally, I think people are a lot more scared across the board, which, depends on your thesis. Like for me, it's like a good buying opportunity, but it's tougher to raise capital in that time. And so for me, I'm just like doubling down on content and getting my name out there. But like, if you're raising capital today, it's not necessarily easy, I don't think so.
That's true. And those stocks, their portfolio dropped. So I had 1 or 2 investors, but they were going to pour their stock money out and invest from their IRA, and it kept dropping. So they started out at 100, and they went down to 75, and they went down to 50. So that's definitely understandable.
Chris, real quick, are you finding you got to sweeten the deal at all then with the investors you are working with then on some of this stuff? Because not only stock market, but crypto's getting slaughtered. Everything's kind of down, so people are turtling up a little bit. But
I'm guessing that answer is going to kind of unfold over the next couple weeks, couple months. Probably going to have to change with the landscape of today's environment a little bit. Would you agree with that, Chris?
I mean, so I'm not raising for any deals today right now. So I don't have that specific issue, Daryl. This is kind of more of a general, like I have people hitting me up to raise capital and people hitting me up to talk about deals and that they're having problems with. But personally, I wouldn't change your deal structure. I wouldn't be looking to like sweeten the deal or change the underwriting. I think that it's more about having to me, it's kind of having your investors preface up front. I always say that I don't want people's first 50,000, I want their second 50,000. So like, it just as a phrase, because if someone's that thin where the stock market drop is really impacting their ability to invest, then maybe they should have a money, let's talk about this for 6 months down the road where you set money aside just for real estate. But I know Daryl's been doing this a lot longer than I have, so I'm still kind of learning here as well. But for me, I wouldn't be, I don't think I'd be trying to change my deal structure to adjust that. I mean, I've seen, one of my deals we were in, they're looking at taking on preferred equity, which was changing investor returns because we had, they were taking less at the end of the day, less money out of the deal. So you can always look at preferred equity if you're, looking to raise money and having a tough time with individual investors as well.
gotcha. Thanks.
Yeah. All right, we got another question here for you, Bernadeau. This is kind of looking towards the future here, and how many doors or what number are you targeting before you leave your W-2? So like down the road here, what are you targeting?
So I don't have a door count. My number is the number that is going to exceed my income at my job. So that number is fixed in my brain. So as soon as I hit that number, I'm walking away, and then I'm going to keep going forward. So really, it's not more so door count, but just cash flow that I can just leave my active, job. So
yeah, that's good. I was going to say door count is one of those very, very, I don't know, nebulous type of things where like, if you own the whole property, it's a very big difference between that and say you split it up with a bunch of different people. Your door count is very, the percentage that you own, the equity that you own is very different. So
Care about your bank account.
Mm-hmm. Good. Let's see. I'm going down more questions here. Question came up from Queenie. Let's see. Have you made any mistakes in your multifamily investing journey, and what have you learned from them? Any other mistakes that you like to discuss?
Yeah. So we made a lot of mistakes on this deal. How much time do you have? So One that I could say right now, we did not walk all of the units. I mean, that's something that for sure next time we're walking all of the units. Not gonna not do that. What else did we not do? An official inspection was not done on this property. We had a few GCs initially in our teams with 20 plus years of experience. So that kind of led us astray from doing that because they've done it themselves, and that was a big mistake. There's a lot more. I mean, I could talk for hours on mistakes. So,
Sure. And
but
truthfully, one of those things, Bernadeau, you know, when you do your first one, you're going to make mistakes. I mean, it's very easy on this side to say, oh, we should have done that, should have inspection, should have walked every floor or every unit. You're always going to make mistakes, and you're going to make a bunch more in like other deals you do as well. It's really about like learning from those mistakes. So it's not a bad thing to make these mistakes, and it's more of a bad thing if you don't learn from them. And you know, so, and don't feel like you got to know everything just because you do one deal. I mean, there's many people out here that have done many deals and will still make mistakes, right? And so don't feel like, hey, just because I did one deal and people are asking me questions and I get on a podcast that I got to know everything. It's like, you don't have to know everything. There's a ton out there that everybody's consistently learning. So
You just need to know where to find the answer at.
that's more important. Yep. Question came up about the I think this is to you, Elsa. Is why was the seller, this is from Marcus, why was the seller able to apply that kind of pushback given that you had a contract in place? This was, I think, talking about towards the end, making you either you had to change the terms or raise more capital, or you had to do something right at the end for the extension.
So on the day that we're supposed to close, if I remember correctly, which is the end of April, and he changed the loan terms on us.
So part of this was seller finance that wasn't mentioned earlier. So those are the terms that were changed.
Okay, yeah, that makes sense.
Right. So, and technically, I mean, if we had a choice at that time to say, hey, you know what, it's not us that not closing right now, it is you. So if we don't agree to it, then I would assume that he's going to return our deposits and we don't have a deal. But at that point in time, I felt that the deal was too good to walk away. So we tried to make it work. And I was able to, let's say we were able to negotiate the interest rate down by 0.5. So initially he had it at 5.5 interest only for 5 years. And I told him, look, if you want me to give you more money, then you're going to have to take that rate down by 0.5%. So back and forth, finally, he agreed to do a 5% interest only. And if you remember, you know, beginning of May, end of April, rate has already gone up. We did have a term sheet from Old Capital, but their interest rate was, I think, 6 or 6.25. I can't remember. So it was way higher than what we could have got with this guy. And we raised, like, you know, Garrison mentioned, we should always raise extra money. And we did. I think we raised $300,000 extra. So I'm like, you know what, we do have some extra money sitting here. Need to raise a couple $100,000 more, but re-underwrite a number, the deal still work with the lower interest rate. So we went ahead and make it work because I thought that, you know, if we could turn this deal around, it's still worth $6.5 million. So it's still a good deal.
Mm-hmm. Awesome. And it makes sense that it's seller financing. So that's why he could change the terms all of a sudden right at the very end, which is, yeah. Okay. Hey, Ferris, we got a question for you. You there, Ferris?
I'm here.
All right, awesome. We got a question for you. It says, it's from Gabriel. It says, I'd love your perspective on how you would finance a deal if you had to close 60 days out from now. Any worries about a 3-1-1 loans?
All right. Well, I just so happen to be someone that closed the deal last week and closing a deal next week and another one 60 days from now. So, right, to kind of speak of it, the first thing I'll say is, you know, think about what you're doing on your value add, right? What is your intention with this deal? And the reason I say that is the biggest concern that I have as a buyer with my deals, you know, outside of interest rate, kind of in the short term, it's really what does it look like whenever I get to that refi, right? And how do I buy myself enough time to get to that refi, right? So having a 3-1-1 helps because obviously you can get the extensions. But the thing a lot of people ignore during that is, to get those extensions outside of the cost, there's certain thresholds you need to meet. And so we always negotiate kind of what those thresholds look like from a debt yield perspective, just to give us more runway, right? Because the last thing you'd hate is to think you're going to get an extension in year 3, and they're like, well, sorry, the deal's not hitting this debt yield that you need to be at. So that's a big one to think about and negotiate. The other thing to think about really is, what do your interest caps look like? Those things have gotten really expensive, right? An example I like to give is, we closed the deal this past Monday, so a week from today. Well, the Friday before, right, meaning like literally the previous business day, that was whenever the news came out about inflation being high. And between the Friday that we were quoted for the rate cap and the Monday whenever we closed, our interest cap went up, $150,000. So on a $500,000 interest cap, it went up 20%. So just realize those have cost, and think about the structuring. Now, me personally, again, I don't think sky high inflation is going to be here for the long term, right? I don't think sky high rates are going to be here for the long term, but I am concerned in the 2 to 3 years. So, the Fed has raised rates on average, right? I think something like 18 months. And, the most they've ever done was 27 months. I went and actually looked up the data myself this past Saturday at the raw Fed data. And so realize that, right? There's a chance that it goes on for a year. And so how do you work through that? And that's where, for us, we're going in low leverage, the first thing on the loans, right? With low leverage, you can usually get better debt to begin with. And the other piece of that is also just having plenty of cash in the bank. Investors are not going to be mad that you gave them a little bit less return. They will be mad if you lost their money. So first rule, Warren Buffett says, it's about not losing investor money. Then it's about, okay, how do we, maximize returns?
It's a great thing. Great perspective to have somebody who's, who's got the experience of closing like 3 deals in like a month, within the month's time frame. So that's awesome. We got another question from Daryl Brooks. This is probably for Bernadeau and Elsa. Like, what are your thoughts on value add versus buying for cash flow right now? Not typically a lot of money to go around until the property is stabilized. So buying cash flow deals that are stabilized versus deals that are value add. What are your thoughts on that?
I always go for both cash flow and value add.
Mm-hmm.
So there are, so Daryl, I think the only property that I have that has no cash flow is actually the one that you're working on with us right now in Statesboro, because that's like a total 100% rehab. But for the most part, Gerson and I, we try to find deals that will give us at least enough return to pay the pref to our investors. And then the equity piece come later. I know that's a little bit more difficult to find. And, but I feel more comfortable, writing that distribution check every month to them. Just somehow it gives them that piece of security assurance that, that they're not putting their money into a hole. So, so that's just my strategy. It takes a lot more underwriting for me to do a lot more deals that I have to look at. I don't close as many deals as other people, but for the most part on deals that I close, I almost always able to pay the pref to our investors until we can stabilize the assets, then they get equity returns.
So I'm in the same boat, and I think that's why I can't find as many deals as I'd like, because I'm looking for cash flow and also value add deals, right? So even in my smaller units, I do the same thing. So if it doesn't cash flow day one, I'm probably not going to look at it much longer.
All right, good stuff to know.
Awesome. With that being said, pal, is there any other questions that we need to fly through before we open this thing up to breakout sessions?
The ones are probably a little bit more difficult. No, so we can open it up. I think we're good. I think we're good to go.
Awesome. So with that being said, if you are not live on this Zoom, if you're watching this on social media, this is where we break out into breakout sessions. This is where I'm going to end the social media aspect of it. Make sure you hop on this call every month, third Monday of the month, Multifamily Masters Live, free content to anyone looking to buy their first or their 51st apartment complex. If you want to go to a conference, Vegas, October 1st and 2nd, Multifamily Con, C-O-N, multifamilycon.com. That's our multifamilymasters.com conference, Las Vegas. On top of that, we have a mastermind, Bernadeau, Elsa, involved in our mastermind. We want you understanding this business inside and out because we want you closing deals, because we want to partner with you. If you're not a member of our Facebook group, find us, multifamilymasters.com. I'm going to end the social media aspect. We're going to break out into a couple of breakout rooms. And then just to give everybody a heads up, we're going to come back from the breakout session. I'm going to let this channel open. We're going to close it out, but I'm going to let this channel open until the last person hops off here. This is where the real networking happens. Oftentimes I'll come back and look at this channel literally 1-2 hours later. And Frank Greco, he will absolutely be putting on a show and be putting out all kinds of content, information, things. I say that hopefully he stays on here tonight. That's his call for sure. But that dude knows his stuff inside and out, and he's always on here networking with people such as Bernadeau. I see Bernadeau on here all the time. So let's hit some breakout sessions. And we will end the breakout sessions in about 10 minutes. Share contact information, share stories, get to know one another, and connect once again after you hop out of Multifamily Masters Live.